Our next one is a panel discussion where we're going to explore the reasons behind the shift of banks towards fintech models driven by agility, innovation, and technology focus. Delve into the strategies for developing customer-centric mobile digital banking platforms and establishing partnership with fintech firms to embrace open banking and API infrastructure. Gain valuable insights in this panel discussion into the evolving banking landscapes and amidst rising fintech disruption and changing customer expectations. Ladies and gentlemen, for this panel discussion, Banks Turning Fintech, Navigating Digital Transformation, Insights and Learning for Banks Through the Fintech Playbook, let me invite on stage Shalini Warrier, Executive Director, Federal Bank, Ranjan Bhattacharya, Managing Director, Chief of Staff and Head of Strategy, HSBC Bank, Venkatesh R, President and Head Operations Technology and Human Resources and CIO, DCB Bank, Madhusudhan R, Co-founder, M2P Fintech, and Shashank Shekhar will be moderating this session, who is the Co-founder and Head of Consulting, the Digital Fifth.
Yes, perfect. Thank you, Vinny. So good morning, everyone, and thank you for being here. And this is definitely going to be one power-packed panel. And most of the leaders I know and I've worked very closely. So it's my privilege to be here and discussing with them. So thank you. So I think when I started my career in banks, so I've worked in the tech company before and then working with banks almost 10 years back, 12 years. Tech was the backbone of the banking, but it was not looked at the way it is being looked today, right? In the last 5 years, 6 years, when people started looking at customer journeys, right? Onboarding of the customers, engagement with the customers, I think lots has changed, right? And somewhere, if you look at it 10 years back when the fintech emergence started happening, they brought that focus of that how the technology can be leveraged to imbibe these kind of the customer and banking interfaces on the customer side of it. So with that note, I'll start with Shalini ma'am. So I think Federal Bank has been one of the leading, which is driving the technologies to a great extent with partner with fintech as well as driving the technologies to a different level. So with you, we'll start and take your perspective that what are the banks have able to get the learnings and insights. When I talk about the fintechs, primarily more from the tech uses of the tech perspective, what are the banks are leveraging with them?
Thanks, Shashank. Good morning, everybody. Pleasure to be here as usual. So from a Federal Bank perspective, as Shashank said, we do a lot of work with fintechs, and this has been a journey that's commenced a few years back. It's not something that happened overnight. Strategically, we do believe and work with on the basis that fintechs are an integral part of the ecosystem. Collaboration rather than competition or other means of working with them is really the way to go forward. So collaboration is really at the core of what we do. And what we really started off with in Federal Bank a few years back was to first say, let's put the infrastructure in place that enables us to collaborate with fintechs. So we put the APIs in place, put the gateways in place, etc. before we started working with fintechs. Since then, we've evolved a lot on this journey. For us, the reason it's important is because, one, it gives us access to a customer base which otherwise normally may not have been something that Federal Bank could have been kind of attractive to. If you look at the salaried millennials, the guys who I say are born with mobiles in their hand, etc., that profile may not necessarily be intuitively inclined to a Federal Bank. So it's given us access to that kind of customer base. The second is the bank has been heavily, very secured in its lending. We've had a very good run from a secured lending perspective. As we were on this journey to improve our return on assets, the credit cards, personal loans became an integral part of what we needed to do to build in the future. And the route for that was not just organic. We wanted to make sure we had partnerships in place. And therefore, we started doing a lot of work with fintechs on that front from a credit cards, personal loans perspective. So it helps us kind of jumpstart our ROA journey. And last but not the least, and that's really addressing the point you made, Shashank, to a very large extent, the work we've done with fintechs is putting some sort of reverse pressure on us. The reverse pressure comes from the fact that banks like us, we've got a 90, 100-year history. We're still agile and all that stuff, etc. But at the end of it, we've got to be at the forefront of technology changes. And in working with fintechs, we get a lot of, stuff where we need to improve things. So I'll give you a couple of examples of that so that it makes it very clear. So, the whole architecture of how we were doing our UPI payments was really something that we had built over the years. But over the last 2-3 years, working with a couple of our fintech partners, we've re-architected that completely based on inputs that have come from the partners. So it has helped us really create a very different technology platform that now enables us not just to process that partner's volumes, but also helps us to scale up materially. The second example of what we have is how we've kind of revamped some of our mobile banking capability based on some of the learnings we've had from our partners. The third is the whole agility and how we do system development in a much more agile fashion. So all of these have been areas where, some amount of the reverse pressure has helped. Which is why I keep saying this is a collaboration, because if some of my fintech partners were on the panel here, they would also, I'm sure, corroborate the fact that they've had pressure from us on various areas, whether it's regulatory compliance, whether it's operational risk. So it's two sides to the same coin. I don't think either of us can exist without the other.
Thank you. Amazing insights. So extending the same thoughts, so Ranjan, I'll come to you. And I would like to take from you, because it's in a global bank and the institutions, and I want to bring that global perspective also. So in India, as well as the global, you are also collaborating largely with the fintechs and all these things, and you carry the large legacy infrastructure and technology. So how the learnings that you are bringing into and driving the digital transformation for HSBC?
Thanks, Shashank. I think, firstly, I would like to take a step back from fintech into tech itself as a larger topic, and probably the journey I have seen HSBC taking in the last 5 odd years is to embrace tech in its DNA. I think fintech, of course, is a great story. Shalini ma'am talked about collaboration and so on. So, of course, in fintechs, we bank fintechs, we collaborate with fintechs, we compete with fintechs, we learn from fintechs, right? But coming back to my point on tech, maybe to flip it around, I'll flip it 360 degree to the people. Why I say people is because the tech is ultimately for humans. It is for our customers. It is built by people and it is run by people. So if I say tech is by the people, of the people, for the people as a cliche, okay, then you sit back as a bank and think that if your DNA were to match that, what do you need to do? Okay, so I'll take the for the people first from a pure customer lens and customer centricity point of view. So if you see whether it's HSBC's interface or most banks, the UX and the UI is the first thing that you saw changing during this wave. Today you go to a HSBC website, you access it on a mobile. The interface changes like an app. So the experience is exactly like an app. If you go to our app, it would allow app in apps. It would invoke other apps. For example, in broking, we have a tie-up and it actually takes you to some other platform. So we have learned on the UI UX, we have learned to declutter the UI UX. So it's just not functionality, it's also about how the user is thinking about the journey. So a lot of work has gone in. The other part on customers is what I seriously feel on trust. And in the banking business, we all know trust is at the heart of the business. The English word bank means I bank on you. That is why we are called banks. Okay. And I think in the previous session, we heard the tech equivalent of trust, the tech trust piece of simplicity and transparency. The human trust piece, what I learned was reliability multiplied by credibility multiplied by intimacy. Okay? Reliability is actually your consistency, your uptime, your resilience. So even though you may not be a fancy app, your your customer expects you to be reliable. I open this app, it will work. It will not have its own whims and fancies. Credibility is your functionality. Okay, how credible are you on your story? Or is it just marketing out there? And last part is the most interesting, which is the intimacy part, and how do you apply that to tech, right? I'll call out the phones. You know, some of you are, I'm sure, Apple users, some of you are Samsung users, some of you are OnePlus users, and so on. But you have a certain intimacy to your brand. You know, for example, that your brand's functionality is now less than another new competitor, maybe who's doing a flip phone, but you love your brand and you stick to it. That is the intimacy quotient. You have 2 food delivery apps, but you are somehow stuck to one. Okay, so I do believe that this trust equation plays out a lot on the customer side, and that's what we as a bank, we have tried to learn from. Because frankly, trust is where HSBC really stands out, and especially so in the Indian market, which happens to be our 3rd largest market globally. We bank around 45% of the MNCs here. We have a trusted position. We are as old as the Indian railways in India. We were established in the same year. We sit in policy making bodies where we sit and think what Viksit Bharat should look like 10 years, 15 years from now, right? We were there in the same discussions in 2013 or 14 when UPI was being conceived, and when there was questions that will smartphones really replace feature phones, and therefore does UPI has a future. Today we sit in 2023 sitting about what the next. So that is for the people. I think a long-minded piece on the customer and probably a shorter one on of the people, because that's the people in the bank who use, who sell, who sit out with the customers. And we all have very experienced bankers, but one downside is that, hang on, they are not from the tech world. So how do we get our frontline comfortable? How do we get our customer services comfortable? How do we make sure that they are not thinking that tech is a business of some CIO or CDO and some rocket scientist sitting within the bank and the rest of us are not? So a lot of efforts went into our digital upskilling courses, getting digital into the DNA of everyone in the bank, thinking everybody's business is digital. So that's the of the people part. And by the people, we realize that the tech engineers from the IITs and the smart universities of India are our strength. The HSBC has more than 10,000 people in India developing for the whole world. And of course for India as well. So we have purely tech centers apart from operations GCCs in Pune, in Bangalore, who are not just doing banking tech, who are doing stuff like metaverse, who are doing stuff like quantum engineering with IBM. So serious tech development, and we also take from Fintechs, we take from competition, we take from tech majors. So I think by the people is a very big way, and you have to make your environment like that. So we have remodeled our office spaces like WeWorks, so that we have techies who can feel at home when they create these innovative structures for our customers. So a bit of a long-winded answer on how we are imbibing the tech DNA into the bank. And back to Shashank.
No, thanks, Ranjan. I think this perspective could have has come from you, because you're looking at both the side as a strategy driven through the technology, as well as you're wearing the hat of the chief of staff. So thanks, that's a good perspective. So now coming to Venki, I'll talk about, so Shalini spoke about the agility and Ranjan talking about the trust. So when the banks are trying to imbibe these technologies coming from the fintech, and at the same time you need to be compliant to the guidelines from the RBI and as well as the risk protector, right? Because bank has, then only you can bring the trust factor. How do you see that the organizations are making a balance between the adoption of the technologies as well as balancing the risk and the compliance?
It's a very good question, and we have been seeing in the market, actions being taken both in India as well as globally in terms of, how compliance is important, because we work in a regulated environment, and innovation typically means that it would actually precede, or rather it would succeed a regulation. any principle or any policy that has been made, it has been made at a point in time given what the circumstances are. And innovation that is happening with regard to fintech, and every bank, every fintech is actually banking on new innovations and newer ways of doing things, either in terms of building efficiency or in terms of building new product offerings, etc. I'll give you two sets of examples in this, that when you work with partners, which is typically fintechs, and fintech could also be two types and the banks could also be two types. One, really know that they need to ensure that there is a compliance to be ensured and what is a roadmap around that. And then there is an agreement between both the parties to see that, look, we'll need to work towards that. The other is to say, look, this is a compliance, but I would continue to do the way I want to do. A regulation will come and catch someday or the other. Just because somebody is stealing and not getting caught doesn't mean that that part is right. It will catch up. The one way, so that's one part. The other part is to say that we will work on a roadmap, and I'll give you probably an example of M2P, and we started working with M2P very early days, and not everything was great from day one in terms of there are requirements, etc. But I think there was a partnership to say, look, there is a roadmap and we need to work on that, whether it is about taking a cyber insurance for ensuring that if in case something goes wrong, etc., to making compliance work. But if there is no meeting of minds to say that we together want to comply, I think it is a dead end. And the first model which I gave an example of M2P, I think we have had a very enriching relationship because both the parties are aligned. They know this is a regulation. And where you have a disconnect with the regulation, I think a regulator is very keen to listen to your perspective. Say, look, what is your point of view? As long as you are not breaching two aspects, which is KYC and AML, which is a key part of any regulation from a banking perspective, and the second is on the cyber security, because that's also to protect what we have been discussing about the trust and bank per se. I think we have a home. I think those organizations who have been able to agree from an agreement point of view between the bank and fintech and collaborate, they have a much better success story than those who want to challenge the regulation and say, look, we will continue to do what we want to do. I think, our answer is out everywhere. So back to you, Shashank.
Thanks. Shalini ma'am, you would like to add?
I'd like to come in on that, and Venki's covered most of it, but I'd like to come in. Regulatory compliance is non-negotiable. I know this is something all of us say, but it's always better to keep saying it over and over again so that we don't forget it. Operational risk, credit risk, these are all risk appetite. Banks can have varying risk appetites on how much you want to do from a credit risk perspective. But regulatory non-compliance goes kind of really at the bedrock of everything that we do. From a federal bank perspective, and Madhu will testify to it when you catch him on a quiet day somewhere. But from a federal bank perspective, the way we look at it is, and we've got a very kind of, proud of the rigorous process. The first is a meeting of minds. Venki also referred to it, which says it's got to be a meeting of minds between the two parties that regulatory non-compliance is at the core of what we're going to do. We're happy to discuss operational risk, we're happy to discuss credit risk, but regulatory non-compliance is the thing. So the first thing we really do is, and this is done at my level or my head of fintech partnerships level, is to have a conversation around that. And if we don't believe there is a meeting of minds on that, I have no hesitation in saying we will walk out. So that's the core of where we start with our fintech partnerships. The second is we've created a fintech partnership business unit. What we've done in that is we've embedded compliance, operational risk, etc. within the unit. They retain their functional responsibility. They don't obviously report to the business. They should not. Having said that, they co-locate with them and are part of the initial discussions itself so that we know where the boundaries are being drawn and how the boundaries are being drawn. The third is every partnership, before we do a green signal to go ahead, before we even start talking APIs and any other thing, goes through something called the Fintech Steering Group. My partners know it, and chaired by Shyam, my MD and CEO, where the business has to present why is it important and what are the kind of regulatory ambit under which this partnership will be done. So that's the kind of process we do, and thereafter, obviously, we've got audits, we've got all the other things. The reason this is kind of very, very important is, as again Venki said, and Ranjan also said, we're in the business of trust. I'm ultimately working with depositors' money, right? I'm not working with, yes, my capital is there, but it's depositors' money. And if that trust is undermined, everything else goes for a toss. So I think it's absolutely imperative that, banks and fintechs collaborate, and the regulator is really at the forefront of it, in my view. You look at digital lending guidelines, look at co-branding guidelines, look at IT governance guidelines, look at the recent moves. Ram was just talking to me about SRO and what RBI wants to do with SRO. So in a collaborative manner, in my view, this industry will prosper materially higher than what it has been so far.
Thank you.
I think if I could also come in, I think underscoring the importance of this topic and the topicalness of this topic. I think as I was saying, credibility is the part where I talked about the functionality part of the credibility. The other is the compliance part and how you are seen by your regulator, your customer and your own staff. Mind you, in front of your own staff is in my mind the moment of truth. Because if you cut corners, your staff knows you've cut corners. Your staff knows your boss told you to cut corners. That is where you failed. Even if you live with the letter of the law, but you fail the spirit of the regulation, we believe as a bank, genuinely you failed. It may slow us down in some of our launches, and I know some of our colleagues are here in the audience, and we actually are quite a cynic on how much we go into the spirit of the law. But in hindsight, I think that pays off. And we are actually quite lucky in India to have such a progressive regulator. This is one country which has embraced things like tokenization so quickly. We've controlled the whole crypto piece so well. We have brought in safety like 2FA, the whole audit and rigor in the API stack that NPCI has. I think this regulatory framework evolves as the landscape evolves, which encourages us, right? And so I think a big plus to this as a key part of the banks turning fintech story.
Thanks, Ranjan. So now, Madhu, sorry for coming late to you. I think you have been working with the banks and it's already now well known. But before come to you, the question, I was in tech in the bank. I've seen that earlier any tech projects used to take like at least 16 to 18 months kind of in a time frame to get live. And I've worked with you also, and I've seen that one core platform going live in the 4 months, right? So how do you helping the banks, like players like you, because you are on the other side of it, how you are helping the banks to adopt the technology which is very much like a fintech, which is agile and all these things? And what are the challenges that you foresee? And what are the banks should do that? Many of them may not yet be doing that.
Sure. Thanks, Shashank. I have all the wisdom, sitting next to me in terms of how we have evolved. We started almost a decade back, and fintech was not a buzzword. So it was really about nuts and bolts of how do we get things done. And what has stayed, constant is the fact that when you put this to a newspaper test, right, any partnership, whose name will the newspaper print on the, if there's something goes wrong, right? So that's the need to actually, the first thing that we have to make sure is what is the franchise risk, whose trust is it breaching if it, things go wrong, right? So that's actually stayed consistent. And in the way, organizationally we have evolved and we have seen the ecosystem evolve. While fintech is a very broad term, it actually will have 3 or 4 cohorts in terms of who the economic buyer in the bank is. So if it's a business, so if it's a B2C kind of a setup, it's typically the business guy leading it because it's going to lead to balance sheet growth and, and whatnot. But if it's bringing process efficiency, risk management, or, they are doing things differently, or, to Shalini's point where the UPI stack got actually better because they collaborated with the fintech partner. It's more about how well we can get our products better to our own customers, right? And then there's also another dimension to it, which is technology officers in the bank saying, how do I harness and harmonize technology so that I can reduce the points of failure So you have fewer, hops that you need to do in a transaction sense. So we have seen all of these 3 or 4 cohorts evolve from a fintech partnership standpoint. Initially, there was this, maybe 8, 9 years ago, there was a resistance to touch anything core, right? Because, you are at the heart, touching the heart of the bank and you don't want something to go wrong and all that. But over time, I've seen this, opening up from banks' perspective where most banks run something like a POC, right? Like, or a controlled pilot where, you lay the, rules of the engagement and you say that this is the perimeter within which I want to test something. And if it works well, then we kind of scale up, right? So I think that maturity has come into the ecosystem where we today do not shy away from something that is new tech. So if I go out and say, I have an AI-based onboarding platform that can do risk management in 30 seconds and bring down, let's say, in a housing loan application from 60 minutes to 6 minutes, 8 out of 10 bankers in the room will raise their hand and say, I want to partner, right? Which was not the case 5 or 6 years ago, right? Because there was this is new, what if this goes wrong? And therefore that maturity as an ecosystem we have come about where we feel now that we should, as a bank, we should not be left behind. And I've been a banker before, my visa days. So therefore, we have seen that, especially in large organization, it would be a struggle to even get this idea into a table where we discuss and say, boss, can we look at the merits of it or not, right? So I think that to us, as an ecosystem, we have evolved. And a lot of the smaller companies also, there is, the whole governance aspect that has come in where the cost of governance, right, for all the right and the wrong reasons from a regulatory perspective as well, is today so prohibitive that you don't want to do things which are slightly margin improvements, right? Unless it eases up, the way bank operates or the way the bank is providing these products to their customers, that play where, let me try this out, and I'm in the way I'm presenting this, it is kind of dichotomy, but ideas that are relevant, big delta improvements, banks are not shying away, but at the same breath, smaller things where I want to do, I'm doing 10 different fintech partnership, I think that phase has gone. You want to really put that to a test. To Shalini's point, there is a committee. You want to make sure that this is actually value additive to the bank in whatever form and shape. It could be economic, it could be customer additions, it could be balance sheet, whatever that is. But if it is not clear, I think banks are saying no to some of those partnerships.
Thanks, very good perspective, Madhu. Thanks. So before I just continue the discussion, maybe I'd like to pick up one question from the audience. If anyone has a question, okay, it's fine. So till the time get mic ready and some hands raised. So Shalini, I'll come to you. So Madhu brought a very important point that one of the things that bank has also been observed when they are driving the digital transformation, some of the tech decisions are now coming from the business. Business are guiding those some of the tech decisions, and in the earlier session also we have seen that. So what is your learning about that? How the banks, business teams understand the technologies and guiding that decision process?
Thanks, Shashank. So from a federal bank perspective, and I think all banks have evolved to that extent, which is to say that the business is kind of end-to-end responsible from cradle to grave. Responsible from an acquisition perspective, maintenance perspective, ongoing whatever needs to be done, as well as collections, recoveries, everything the business is responsible for. As a natural corollary to that, if business is responsible and accountable, then it just is imperative that business understands this better and is therefore in a position to require what needs to be done from a technology perspective. So banks have evolved and we have also evolved to the extent where business kind of is the seeker of the right technology. Business needs to know what the customer wants and therefore and when I say what the customer wants, it's not just what the product feature is, A feature or B feature, but the entire customer experience from end to end. Business requires to understand that and then puts it forward to the relevant teams to deliver on. So that's really how banks have evolved and we've also evolved to that. But specific from a fintech perspective, what is probably different for Federal Bank, Shashank, is we've kind of, because this is such an integral part of our future strategy, as I said before, we've carved this out as a separate business unit itself. So I literally have a team of people who work with me on fintech partnerships. They do credit cards in partnership with some of the partners we have. They do personal loans, they do credit, current account, savings account, whatever else needs to be done. I also have another part of my business which is the more organic side of the business. And we've kept them separate because we want to make sure that one doesn't cannibalize the other. It's quite easy for the organic person to say, you know, co-brand is doing well, I won't bother about my organic, or vice versa. Now, both teams, therefore, have to make sure they understand their respective customer segments and understand what needs to be done and expect that delivery from the technology one. It could be in-house technology, or as, you know, in the case of what we work with M2P, the business side actually spends time with M2P to say, these are what we want as flows, these are how it should flow. These are what we want as risk management rules in your engine. This is what we want as operational kind of support to get things done. So that's how the business has evolved. Accountability and responsibility comes with that empowerment. You know.
Thanks, thanks, Shalini. So,
I'll just chime in. No, so in a really important point that Shalini ma'am brought out is there is a regulatory aspect to it in terms of how a business unit should be run. But when you do these partnerships and we carve out, you actually go way beyond. You're actually preempting, if this scales, if this becomes like 10 million customers, 20 million customers, how will this be seen, right? What could come up from a regulatory risk standpoint, or what could be a discomfort to the regulator? You're actually foundationally baking that into the process and how you run that business, so that you are not left with surprises when it's a scale business. You are not left to grapple with, now how I handle it, right? So that, you know, and there's a lot of, you know, resourcing that goes into it. The build out happens over 2-3 years time for some business to get to even 1 million customers, right? And you don't want to be grappling with a situation where, now I have to change process, because it doesn't happen. And nobody would like it to be that, you know, after the fact, I'm making it in the letter of it, but, you know, the spirit of it doesn't actually follow suit. Yeah, that's a really important thing.
I think if I could add on this topic, I think for us as a firm, business is a core part. No decision on tech can be taken without business as well. But how core is that partnership is what I want to underscore. So one part is the co-creation aspect, the co-ideation aspect, and the joint ownership aspect. Because, you know, what's on the risk side, what's on the customer side, what do we really want to do? And then when you create it, it's not like somebody else has created a baby and you're trying to poke holes at it, but you've jointly created it. It's your baby. So both the tech folks and the business folks together ideate, create, iterate, prototype, and bring it live. And the other part, okay, is also the prioritization. And that's where the difficult choices have to be made by business. Let's say if you have $1 million to spend and you have two options. One is an esoteric tech option, which nobody else in the market has. You can launch that with $1 million. And the other is resilience. Let's say a particular core app functionality is failing time and again, and you want to upgrade that. Let's say this is a choice to you as a business guy. You have only $1 million. And this is the choice you have to decide on. This is where the rubber hits the road. And we make zillions of these choices every day in today's world. And that is the business call that we expect.
Thank you, Ranjan. So I have one question. Please go ahead. And request in context of the time, get to the question directly, sir. Thank you.
Yes, sir. I hope audible, yeah. Good morning, Venki sir, Rajan sir, actually, very nice hearing you. Question to both of you actually, that we spoke about like compliances or difficulties to adopt fintech. Would like to understand from that, you know, how much it takes for your respective banks to get idea to the time to market. So idea to the execution, question number one. Another is basically how you control the cost when it comes to the adoption of that idea. So that's a question.
Yeah. Maybe Venki, you would like to pick it up.
I think if I start with M2P's example only, I think the whole purpose of taking an idea from outside and not trying to innovate yourself because you want to get to the market very quickly, I think it is, at times it is as soon as 3 months, you know, to sometimes it takes 18 months because depending upon the complexities, and as Madhu said that, you know, earlier the banks were not very keen to, you know, let you touch the core banking or core systems and do anything. And over a period of time, there is lot more flexibility and lot more understanding. People have also figured out over a period of time how to get an idea to the market very quickly, understand the compliance requirement, tech integration requirement, agreement, and also seeing the accountability on either side. Ironing that out takes time, and as Shalini mentioned that there is a committee process, etc. Every organization has similar kind of a, I won't use the word bureaucratic process, but there is a process that you have to go through because the regulatory compliance is key. You cannot exist without ensuring regulatory compliance, and as I mentioned, that if you have certain points within that whole idea that you need to consult regulation because there could be interpretation issue, you should be able to go to the regulator and seek clarification and then consult. So long but short, in the sense the answer is that anywhere it can take 3 months to 18 months, but the whole idea is the speed to market. Otherwise, there's no point in going with a fintech partnership because idea is one is innovation and the other is speed to market while remaining fully compliant.
Thanks, Venki. And I'm sorry I'm not able to pick up the question. And I'm also feeling sorry that I have so much to talk to this panel. But in context of the time, we'll take a pause. But thank you, everyone, for sharing the thoughts and getting a good insight for the audience. Thank you, everyone.
Thank you, Mr. Shekhar, for conducting this session. Ladies and gentlemen, let's have a huge round of applause for our panelists. Photograph, please.